Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Desert Gold Ventures. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in meeting with Desert Gold Ventures, please click on the Schedule Meetings tab found in the platform navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Don Dudek, Director of Desert Gold Ventures, which trades on the OTCQB venture market under the symbol DAUGF and on the TSXV under the symbol DAU. Welcome, Don.
Thanks, Cecilia, and hello, everybody, today. Today I'm going to talk to you about a gold exploration company that's active in West Africa. And for a bit of background, I've been involved in that part of the world for close to 15 years now. So I'll start going through. So first image, fairly straightforward, pictures of some drill core on the left, artisanal workings on the top, and just some of the countryside. Next image, table of contents. We'll go through 13 slides in total. And the first one will be a disclaimer and disclosures, which is pretty typical of all presentations. Next image, I'm going to talk about what we're doing. We're looking for a tier 1 gold deposit in West Africa. And what that means is something that will produce 200,000 ounces of gold a year for 10 years. I'll tell you why that is a reasonable expectation or target for the area that we're working in, and talk to you a bit about the exploration opportunity that we see. Our land package is a contiguous 440 square kilometer block. And so for a bit of reference, this is a little bit larger than, let's say, the city of Denver, about the third of the size of the city of LA. So it's a large area. It takes us more than an hour to drive from one end to the other. And again, this is through trails in the backcountry. There's at least 6 mines that are associated with the geology that we're on, and I'll show you where those are in a bit. We're bracketed by tier 1 mines to the north and to the south of us, with some of those mines producing up to 600,000 ounces a year. And again, with all the major kids in the block, Barrick, B2 Gold, and another group called Allied Gold. I've been active in West Africa, like I said, since 2008. First as a VPX, or Vice President of Exploration, for Avion Gold, which was sold to Endeavour in 2012 for around $400 million. I also worked with Endeavour for a couple of years, leading a feasibility study in Burkina Faso, which is the adjacent country, and then took on a role with a company called Savory Gold, sold that to another company called Semifo in 2019, and I've been active with Desert Gold since about 2019. Our property hosts a resource combined of just a little over 1 million ounces, consisting of measured and indicated resources, which are we have the most confidence in by the rules. It's a little over 300,000 ounces, and inferred mineral resources, which are about 770,000 ounces. This is a target-rich environment, so the likelihood of us adding to this initial resource total is probably pretty good. We have other zones called Grabassi West, 3.5 grams over 33 meters. A very economic deposit in West Africa as an open pit is 2 grams. Some of the mines are going down to a single gram, and so these intercepts that are listed below are pretty material in any place in Africa and even in North America. We're hoping to do 30,000 meters of exploration drilling this year, but that's pending funding. A bit about the company. Fully diluted, we're about 280 million shares, issued and outstanding just under 200 million. As you can see from the warrant schedule, a bunch of those warrants, unless something changes, will fall away this year. Probably 25 million warrants will disappear off the list. Major shareholders, Orca is a European investor with just under 10%. Management board, 8%. Merck Investments, 7%. Grand Peak Capital, which is a group of investors out of Vancouver, at 5%. Lee Jones Gable are an investment group in Canada, Vancouver based, about 3%. Ross Beatty is a well known investor in the mining space, probably a billionaire or close, just around 3%. And then a few other additional holdings after that. Myself, I'm a director and a technical director for Desert Gold. Jared Scarf, who can't make it today, president and CEO. He's been involved in the company for more than 10 years, as well as Sonny Janda, the chairman. Sonny's family is a real estate group based in Vancouver, Canada. And again, very, very busy. Chris Marsh, director, he's a CFA or certified financial accountant, director, so he's good on our audit committee. We have an exploration manager that lives in West Africa, in Mali, and Larry Sang, our CFO. Just to give you a better idea, here we are. We're located in Africa and in the extreme westernmost part of Mali against the border of Senegal. This next slide is what I call the money slide, so I'll walk you through it. Our property package is the crosshatched area in the middle of the slide. Our property lies along something called the Senegal-Mali Shear Zone, which is this gold band that's on the slide. The Senegal-Mali Shear Zone is related to 35 million ounces of production, reserves, resources. In a sense, it's closeology is the way to go. So if that structure is related to that kind of resources in the region, having more of that structure is pretty important. We have about 43 kilometers of that structure. And so to the north of us, there's Sadiola. Now on the slide, it says 4.7 million ounces of indicated resource, a number that just came out yesterday or the day before. They're up to 7.3 million ounces of reserves at 1.51 grams. That Sadiola and Yatela were part of one operation, and that's more than a 10 million ounce camp, and it's been producing for more than 10 years. Lulo to the south is a 10 plus million ounce camp. They're still producing in the order of 400,000 to 500,000 ounces a year from that project. Further south is Fekola. They're well over 7 million ounces now of resources and reserves. They're producing 500,000 ounces a year for the last couple of years and will appear to continue. I started in the camp at the Tabakoto area in 2008. It was a failed mine. Really, they had the geology wrong. The model was wrong. We put it back into production in less than a year in early 2009. And Endeavour took it over in 2012. Endeavour sold it in the early 2000s, and it's still operating as far as I know. The other major structure is to the west. It's called the main transcurrent. That structure is associated with about 10 to 12 million ounces of reserves and resources and production. The largest operator on that structure is Endeavour Mining. They are ramping up production in there from in the low 200,000 ounces a year to over 300,000 ounces a year with some capital investment. Next slide is just a bit of a history M&A in the camp. Long and short of it, the average market capital for an M&A has been $91 an ounce, and we're trading at less than 10. So the average acquisition price has been $210 million, again representing 91 million market cap per ounce for a gold takeover. At the current prices, Desert Gold trades at a market cap of, let's say, $10 or less an ounce, and this is a 90% discount from acquisition prices. The average total resource of acquired companies was about 1.9 or 2 million ounces at an average grade of 2 grams. And again, that tells you about the economics of a 2-gram deposit. And our combined resource is now 1.08 million ounces at a 0.4 gram cutoff. And all of this is an open pit or open pittable. This image is a bit more complicated, so I'll walk you through it. The background image is color contoured magnetic data. We use the magnetic data to see structure, see changes in geology. For instance, look at these lines trending to the northeast. So that's to the top and right. Those are late intrusives that have come up through the rock package, and they also occupy shear zones. The major structure in the camp is the Senegal Molly shear zone. So that's the black dashed line that runs through the middle of our property. And again, it's a 43-kilometer structure on our ground. To the left, the gray dashed line is called the main transcurrent. We have about 11, 12 kilometers of that structure. And again, for reference, it's a 10 to 12 million ounce structure in terms of gold deposits related to it. And the Senegal Molly shear zone is 35 million ounces plus. Our million ounce resource is in 5 deposit areas, which are within the red circles, with some of the mineralization and returning, a gram over 100 meters or over 300 feet. And in drilled width, and true width is around 250 feet. The dots on this image, the purple dots are gold in soil, which is 0.2 grams per ton. The yellow dots are 50 to 200 grams per ton. Scattered through the property are a number of occurrences. And so what you see in the white dialog boxes is the gold grade over drilled length. So let's say for Barani East, which is in the center right, 7.8 grams over 13 meters, 8.4 grams over 10 meters, 6.3 grams over 13. These are pretty good results. Of course, that's part of our current resource. Other ones like SOA, which is in the upper right hand as well, center right, 2 grams over 30 meters, very economic type intercept. We have not followed up on that drill hole yet. Another one sort of in the middle, north, called Kamana. We had 1.8 grams over 17 meters. Again, a very economic resource. We haven't followed that up. So really the point I'm trying to make is that there's a significant amount of gold mineralization that we need to follow up on. We are in the right sort of part of the world for finding a significant gold deposit. And the likelihood of finding more, I think, in my opinion, is 100%. And we just need to get on the ground and do more work. Another slide, and this is just more for general information. It goes through our mineral resource, which is measured, indicated, and inferred categories. Measured is the highest level of confidence. Indicated is the second highest level of confidence. With measured and indicated resources, you can calculate reserves. With inferred, it's the lowest level of confidence. But one of the things that we interpret the inferred fairly strictly. And so I would have a lot of confidence in our reserve inferred resources in that we can, with more drilling, we could probably move the bulk, if not all of it, to measured and indicated resources. So, what are we going to do, or what we would like to do in 2023? Approximately 30,000 meters of drilling proposed. We just completed an auger drill program. We put out news release, our results on it here the other day. We had very good results in the southern part of the property near Mugiafar South, getting over 2 grams gold in auger samples. And so what that indicates is there's a high likelihood that that's a mineralized zone and it needs to be tested. The yellow dots are proposed air core holes, so these are the cheapest holes. These are drilled in rock that has been weathered. It's soft. We can go down approximately 50 meters in depth, and this is a good first pass because it's the cheapest drilling. Reverse circulation would be the orange spots, and really Gerbasi West in the left, Mugafar south, and then scattered through the property. And then also some core drilling. We use the core drilling to help us understand the geology and the structure and make things a bit more predictable. So, sort of summary highlights. It's a very large land package. We have good sections of some of the most productive or the most productive features in the region and in Western Mali, in Mali especially. Regionally, there are 11 gold deposits related to these structures, and 9 of them have been mined, are being mined. Our target model is working. We're seeing similar geology as nearby producing mines, and that gives us a lot of confidence. And the more we learn about the adjacent mines, the more we can find. Total, we're just a little over 1 million ounces, and we have 24 gold zones with a lot more exploration to do. Upside, new gold zones, compelling soil anomalies, compelling auger anomalies, and many things that need to be tested. And just as a final, this kind of program to do about 30,000 meters of drilling, it's a lot cheaper than we can do in North America, probably at half the cost. Our discovery cost per ounce is probably less than $10 US per ounce. And so it's a pretty good trade compared to other projects. And last slide is just footnotes and sources if you want to look and see and check out some of these other companies that are active in the region and where the references came from. So that's it for the presentation. I can start answering some of the questions. One of the ones is what are our key milestones for 2023? And the second part of it is our exploration program funded. Note the exploration program is not funded, and the milestones would be to drill 30,000 meters and hopefully put out an updated resource in the final quarter of 2023. One of the other ones, which I probably should have touched on, is the geopolitical concerns. I've been active in Western Mali since 2008. Through whatever's happened in Mali as a country, we have not missed a day of production. We have not missed a day of exploration. We haven't seen any sort of terrorist activity and political activity that would affect our work in Western Mali. Obviously, we keep track of it, we watch it, but to date, and if history is any indication, there hasn't been any issues. One other question, what is the infrastructure in that part of the world, and what is the anticipated all-in sustaining costs? We are on let's call it a casual road network. We are between a couple of producing mines. So there's good roads from the southern end of the belt to the northern end of the belt. We have good access to water. There's a river that really separates the border between Mali and Senegal, and that river would supply all the water we need for process. We're kind of remote compared to Sadiola to the north and Lula to the south, because both of those have developed communities that built on and around the mines and a workforce. But I would guess that people would move to a new venture in a new area, and as always, the population and the roads and everything would improve. How you move gold in a country like that, I think almost all the operations fly the gold by charter from the mine sites to Bamako, and then it's taken up either to Switzerland or to South Africa or other places where there's smelters to further refine the gold. One of the other questions was the all sustaining cost. That's really tough to tell right now. When I look at how other projects are tracking, somewhere between, let's say, $800 to $1,200 an ounce, probably fairly reasonable. As a start, obviously your costs go up as you go deeper into pits. But until we do a feasibility, I wouldn't be able to say with any degree of certainty where we'll be in that range. The lower the grade tends to push your costs higher. The higher the grade, it pushes it lower. So the end result is the mine plan, and that'll dictate what your most likely all-in sustaining cost per ounce is. Um, Another question I had is who are the neighboring mine companies? Well, to the north is Allied Gold. If you had been paying attention to the space, they just announced a deal with a group of Yamana or ex-Yamana mine executives this last week, where they're going to value Sadiola and a couple of other assets together at 1.2 billion, and so that transaction's in progress. To the south of us, about 50 kilometers away, is Lulo, which is Barrick. Barrick has 3 mines in production, including Gunkoto and Lulo and Gera, and those are producing close to 400,000 ounces a year. Further south, another 50 kilometers is Fekola. They're in over, that's B2 Gold. They're in over 500,000 ounces a year. And then to the south and west of us, again about 50 kilometers, is Endeavour's Sabodala operation, including Massawa. And they're ramping up from low 200,000 ounces a year to about 350,000 ounces a year. So that is all the questions that I see here right now. Anyone else have anything to query me about before we call the end of this presentation? Okay, also just a quick summary then again. We're on a 35 million ounce structure. We have 43 kilometers of it. The major deposits are about every 50 kilometers along this belt, and we're halfway between 2 10 million ounce mining camps at about 50 kilometers from each. So odds are in our favor. We have a lot of exploration opportunity within the project. The likelihood of adding new zones, additional resources, I believe, are pretty high. And we have no shortage of targets to test this. The market has been poor for junior explorers over the last few years. But as some of you may have noticed today, gold jumped close to $40 an ounce. Last I looked, it was a little over 2017 an ounce. I think our time will come. I think projects like this are hugely undervalued, not only for what we have on the ground already in terms of resources, but what's possible in the exploration portfolio that we have. At some point, someone's going to take a hard look at us and either help us with the exploration by injecting some capital or taking us out at hopefully a decent premium. Anyways, everybody, nothing else to add at this point. Thank you for your time.